The RBA has held rates, but you're still getting crushed by your mortgage. Guys, Scott here at Freedom HQ. So the RBA didn't drop rates today, and everyone's either angry, confused, or praying for a rate cut next month. But here's the truth, guys. Don't wait for the RBA to save you from your financial mess, your financial dilemma. There are proactive steps you can take that don't rely on the RBA. You actually do not need a rate cut. You need to get out of debt fast. So it's not about having a lower rate. It's about strategies to get rid of that mortgage as fast as possible. And what you need to know is it's actually possible to wipe your mortgage out in 7 years. So whether you're on a cash rate, 4.3, 4.1, 3.8, 3.6, whatever, you're still on a 30-year mortgage, still structured the wrong way, still getting killed by daily interest. So first, here's why they didn't drop the rate. The RBA's job is to control inflation, okay? So right now, inflation, it's actually still sticky. We're not talking about TVs or electronics. We're talking about the stuff that hurts every single week. Haircuts, car insurance, groceries, electricity, rent. These are all still inflationary. This is called services inflation. It's the big one. It's still running hot. On top of that, wages are rising, and they're rising faster than productivity. This leads to long-term systemic inflation. It's not good. So the RBA sees this as a big risk. Higher wages plus flat output equals more inflation over the long term. Yes, household spending has dropped, but it hasn't crashed. The unemployment rate, well, it's still low, and the economy, while slowing, it isn't in a crisis. There just isn't a strong enough justification for a rate cut. So what's the RBA really thinking? They're thinking, well, if we cut rates too early, inflation might bounce back, and if that happens, we'll have to jack the rates up again. That's even worse. They've also got one eye on the US Federal Reserve, and the Fed hasn't cut rates yet either. So the RBA are waiting, and there's nothing wrong with waiting, guys. This is actually the right move. And for now, holding the cash rate at 3.85%, they're basically saying, we don't trust inflation yet. We're not giving you cheaper money until we're damn sure this inflation animal is under control. Let me warn you guys right now, guys, you do not want lower interest rates if it means more inflation. Let me choose between higher inflation or higher interest rates. I'll take the higher interest rates every single time. This is because inflation is like a hidden tax, a hidden enemy that's eating away and eroding your spending power, eroding your income, and eroding your wealth without you even knowing. At least interest rates, I can see it and I can control it. And it's on something called debt, which if I've got the right strategies, I can eliminate it, but I as an individual cannot eliminate inflation. Now, here's the part that actually really matters for you. Even if they had dropped the rate by 0.25% today, it wouldn't fix your real problem, because your real problem isn't the interest rate. It's the length of your loan. It's the structure of your debt. It's how much interest you're paying every single day. Let's break it down. If you've got a $600K loan at 6%, you're paying $36,000 a year in interest. That's about $100 every single day just to rent your own money. If the RBA cut the rate by 0.25%, you'd maybe save, $80-$90 a month. That's a coffee a day and half a tank of petrol. This is a distraction, guys. But if you shave 10 years off your loan, you wouldn't save $1,000. You'd save hundreds of thousands. Here's the comparison. $600K loan at 6% over 30 years. This is $695,000 in interest. If you pay that loan off in 15 years, you will save $312,000 in interest. That's a $383K saving in interest. It is speed that saves you interest, not the interest rate. Remember, the bank charges you daily interest. They compound it across a 30-year stretch, and they profit off your belief that a rate cut will save you. Banks made $40 billion in profit last year. Why? Because most Aussies don't question the system. They just roll with it. 30-year loan, interest-only periods, refinance traps. We're all waiting for a rate cut like it's some kind of gift from the heavens, and we're not taking actions right now to actually pay our loan off faster. So yeah, the RBA didn't cut rates, but instead of waiting for them to save you, maybe start asking yourself, how much interest will I pay over the full life of my loan? Am I structured to win or structured to bleed slowly? Most people don't ask these questions. That's exactly how the system keeps you stuck. Let me leave you with this. It is possible to pay your home loan off in 7 to 10 years. I'll put a link to one of my masterclasses in the description below, so you can click onto that to get information to actually get rid of your mortgage faster. Remember, guys, it's speed, not the interest rate. If this made you think a little bit different, drop a comment. Have you ever actually run the numbers on how much your loan is costing you long term? Like the video if this hits a nerve. Subscribe if you want to start thinking differently about money, debt, and getting ahead. Guys, I really want to challenge the thinking out there in the Australian community. Take care, guys, and take back control.